GNUS shares went from 31 cents all the way up to $12, all in just 1 month. Then everyone sat back and watched as a lot of those gains were erased, partially due to short sellers like Hindenburg Research attacking GNUS in a report published on June the 5th. In this video, I'm going to be telling you exactly what's in this report and how GNUS Brands plans on fighting back. And we're going to be starting right now. What is going on? It's Pat from Top Ticker Trades. If this is your first time here and you want to learn about investing and trading in the stock market, make sure you start now by subscribing and tapping that bell so you never miss a thing. I'll see you guys in the video. What's up, everyone? Welcome back to the channel. Welcome back to another video. We're about to take a deep look at the report published by Hindenburg Research, which dropped the share value of GNUS shares. That's ticker symbol GNUS. So before we begin, it's important to note that everything that's going to be discussed in today's video is based upon the opinion of Hindenburg Research, or at least based upon the report that was published by Hindenburg Research. None of this is my personal opinion or anything that I'm trying to put out there. It is all based on the Hindenburg Research report, okay? So since early May, shares of small TV production company GNUS Brands International Incorporated have appreciated in value by more than 20 times on relatively mundane news. We think the stock will drop as quickly as it skyrocketed. And this is, again, what Hindenburg Research is saying, okay? In early May, children's television production company GNUS Brands International issued a press release announcing it was merging its two existing channels into one, to be called the Cartoon Channel, and that's with a K, not with a C. It also announced plans to integrate 3,000 episodes of acquired content, including hit programs from key content suppliers around the world. The company declared its new TV channel to be the economic vaccine for COVID-19. The press release included no numbers about revenue implications and seemed to be a rather run-of-the-mill corporate streamlining announcement devoid of material positives. But nonetheless, the news lit the spark for what would become a momentous stock run. GNUS shares closed the day of the announcement at 48 cents, which is a 52% increase from the prior day's close on over 34 million shares of volume, roughly 30 times the normal levels. So day traders determined that the company was now the Netflix for kids, and with the benefit of some upward momentum, a confirmation bias feedback loop quickly turned GNUS into the hottest speculative stock on the market. Since the day of its cartoon announcement, GNUS Brands has climbed as high as $12 per share on almost 400 million shares of volume traded in just a single session, and with over 220 million fully diluted shares outstanding. The stock currently trades at a market cap of negative 1.56 billion. Retail stock forums from Reddit to StockTwits have been alight with countless rocket ships, emojis, and giddy traders gloating over paper gains, and Robinhood users owning the name GNUS Brands have jumped from about 5,000 to over 140,000, and that's according to Robin Track. Even the company only thinks its shares are worth 35 cents to $1.20, representing downside of about 83 to 95%. The price at which a company sells its own stock to fund its business can be a key indicator of what management thinks its stock slash company is actually worth. So obviously a management team isn't going to issue stock at low prices if it thinks its evaluation will move higher in short order. So companies have a vested interest in issuing shares when their valuation looks favorable in order to minimize the dilutive effects of issuing new equity. So with that in mind, the company raised 3 financing rounds from May the 7th through the 12th at prices ranging from 35 cents to $1.20, which is 83 to 95% below current levels as of this publishing, as of Hindenburg Research's publishings, which the date would be June the 5th. So this means that in addition to management tactically putting a $1.20 price target on its own stock, management would likely go to the market and attempt to sell more stock at the company's current valuation if the stock wasn't slated to get demolished in the short term, which obviously Hindenburg Research believes that it is. 131 million shares are likely to hit the market within 2 to 4 weeks, creating a massive amount of selling pressure. So just as an exciting story is always the fuel to a massive stock run, the tragic ending is often written in the mundane fine print. A review of Genius Brand's recent multitude of stock offerings makes clear that its financial backers are likely weeks away from being able to sell a wall of stock that is almost assuredly going to send shares sharply lower. In March, the company completed a financing that sold convertible notes and warrants to its own CEO and other investors that collectively convert into 131 million shares of common stock at a strike price of only 21 cents. So most financiers that participate in such private placements buy the stock at a slight discount to market prices. The discount compensates them for the risk of temporarily being unable to sell the shares, and such financiers are often looking to make small arbitrage gains by locking in the difference between the trading price and the discounted price they purchase at. That arbitrage can typically only be truly locked in when shares are registered and the SEC approves a notice of effectiveness to sell the shares on the open market. Given the meteoric rise of Genius Brand's stock, those financiers are likely sitting on outsized paper gains, waiting for the opportunity to lock in profits from the retail bonanza fueling the stock price. Yesterday, the company filed a prospectus statement that seeks to allow those very holders to sell almost half of those shares, and Hindenburg Research expects a follow-up filing will cover the remainder. The timeline for when the SEC approves the notice of effectiveness can vary, but based on recent history, it took 10 days for the company's last S3 filing to become effective. That suggests an effectiveness of around June 14th, coinciding with the company's planned launch of the Cartoon Network on June 15th. Once that notice of effectiveness is active, a new wave of selling is likely to pummel the stock as its financial backers rush to lock in profits. And according to Hindenburg, any investors that have not exited by then are, in Hindenburg's estimation, likely to get decimated. Company fundamentals can't support the stock's astronomical price, so investors hoping for the economy's fundamentals to save them are not likely to receive any help. The company's annual revenue run rate is $1.3 million. Last quarter's revenue was only $335,000, affording it a ludicrous 1,201 time revenue multiple. According to FactSet, the company has lost money every single quarter since 2010 and has consistently tapped the capital markets for cash, often on the back of promotional announcements that routinely end up delayed or abandoned. and the company's business is not the powerhouse shareholders might think it is, as seen when reviewing its three most important shows. Some readers might be saying, well, sure, the fundamentals are terrible, but Netflix and most of the other stocks I like also have atrocious fundamentals. Well, stocks with an appealing story can perform well for a period of time, but a story with some stock momentum make for a fragile investment foundation. And the company's story has major holes. GNUS's top three publicized shows are Llama Llama, Rainbow Rangers, and Stan Lee's Superhero Kindergarten. And according to Hindenburg Research, they think that most investors in GNUS brands are terribly they don't think that most investors in GNUS brands are terribly familiar with the details of the key television shows that they now own, so they provide a quick breakdown. Llama Llama is its most popular show, but the company doesn't own the intellectual property and only has a licensing deal with undisclosed but clearly minimal economic benefit. Llama Llama is a show that airs on Netflix based on the popular children's book series, and these shows are the most popular of the company's current lineup. However, GNUS doesn't own the intellectual property behind Llama Llama, as it simply represents their content as a licensing agent. The content deal was announced in 2015, but the terms weren't disclosed. So Hindenburg Research claims that they asked the company for details, and that the investor relations responded with an answer that should alarm anyone looking to understand GNUS's brand's financials, which was, we do not disclose any economic information about our shows or properties. So based on the company's limited revenue and consistent losses to date, it doesn't appear to be a particularly lucrative contract. The number 2 show, Rainbow Rangers, the company has boasted that the show is currently airing on Nick Jr., which is true, but it appears once per day during the week at 3:49 a.m. Eastern Time and 3 times on Sundays. The show is currently not yet slated for a third season, and it is unclear whether it'll be renewed. Rainbow Rangers is another key show for the company, and in this case, GNUS Brands does own the intellectual property behind the show, making it perhaps the company's most economically relevant property. It airs on Nick Jr. and has completed 2 seasons to date. The company made a big deal about its pickup by Nick Jr. in a January 2019 press release announcing that the show had 455,000 viewers in its premiere. So the following is actually a direct quote from that press release, and it says, "We have just received the Nielsen ratings for our latest premiere episode, and Sunday, January 6th, is what's in parentheses, of Rainbow Rangers on Nick Jr., which generated our highest premiere episode rating to date with 455,000 viewers. The premiere episodes are broadcast on Sundays at 11:30 a.m., and the encore episodes are broadcast Monday through Friday in the afternoon. And the strong and growing viewership on Nick Jr. points to an increasing appetite by kids for Rainbow Rangers and the coming tsunami of products at retail." End quote. Another quote directly from the press release says, "Monday through Friday, 4 airings per day and 6 airings on the weekends. The animated action-adventure series premiered on Nick Jr. in November 2018 with 5 airings per week and has consistently achieved high ratings with its target demo of girls from 2 to 5 years old. But the Rainbow Rangers schedule now says otherwise. Most weekdays look like this schedule from yesterday, where the show has one time slot on Nick Jr. at 3:49 a.m. Eastern. Several platforms show us the same, indicating it airs 9 times per week instead of 26, each morning at 3:49 a.m. and then twice additionally on Sunday mornings at 6 a.m. and then 6:30 a.m. Eastern. And Hindenburg claims that they emailed the company to ask about its current number of airings and have not heard back as of the writing of their research report. As GNUS Brands CEO said in the March 2020 press release regarding the show being aired 26 times, quote, "Needless to say, leading broadcasters like Nickelodeon don't make schedule changes of this magnitude without good reason," end quote. He has not commented thus far on the good reason for the show airing in the witching hours of early morning only 9 times per week. Similarly, there is no indication that a season 3 has been picked up by Nick Jr. Hindenburg Research emailed both Nick Jr., the company, to try to get confirmation of a season 3, but investor relations simply stated that negotiations were underway. And Hindenburg finds it surprising that Nick Jr. is still in negotiations. Other shows such as Paw Patrol, Blue's Clues, and Bubble Guppies were already announced as being picked up by Nickelodeon in February. Season 2 of Rainbow Rangers was ordered in April of 2019 in preparation for its release in October. And since we are now in June of 2020 with no word on the series heading into the fall. Number 3, we have Stan Lee's superhero Kindergarten, starring Arnold Schwarzenegger, is another show being created by the company, targeting to be aired in Q1 of 2021. The company has been attempting to launch the show since as early as 2011 on a major network. In the interim, legendary comic book writer Stan Lee sadly passed away in November 2018. The company announced recently it would be launching the show on Amazon. No economic terms were disclosed, but the company hyped that it would be plutonium in a bottle for shareholders. Amazon produces some of its own content, but the announcement made no indication that Amazon was paying GNUS Brands for the show. For most Amazon Prime content, Amazon pays content suppliers a per-hourly rate based on viewership, or they split the rental or subscription revenue. In other words, the company is likely simply posting its content on Amazon and self-marketing the show, a far less exciting achievement than suggested. It is not entirely clear how it intends to reach kindergarten audiences, given that Stan Lee is no longer with us and Arnold Schwarzenegger likely has little brand recognition among young children. And to quote Hindenburg Research, they say, "All told, we just don't see the company magically growing into its current absurd valuation, and the shareholders waiting to register 131 million shares for sale are likely acutely aware of this," end quote. So in conclusion, all those reasons we just went over is exactly why Hindenburg Research is claiming that the share price will go back to $1.50. So ladies and gentlemen, that was the Hindenburg Research report on GNUS Brands. Now, the CEO of GNUS Brands did make a statement to combat this, and I will make a separate video, which will be a part 3 of this series, because we're getting up on close to 20 minutes in this video, and I want to try to keep all the videos short. So I'm going to cut us off right here. If you enjoyed the video and appreciate the information, please do me a favor and hit that thumbs up button. If you haven't subscribed yet, make sure you subscribe, because this is valuable information that you will keep getting from me. And as always, ladies and gentlemen, thank you, and I will see you guys in the next video.